Good morning, everyone, and welcome to the Moneycontrol live stream. You're watching Markets with Santo and CJ. Wow, Santo and CJ. Yeah, sorry, got confused there. Well, of course, we have a lot to digest today. It looks like the market is going to see a little bit of a tepid end to the week after what has been, in general, a very spectacular week for Indian markets. But today in the spotlight, we want to talk about the automobile sector. Of course, the November sales data came out throughout yesterday. Today also some of the companies will be reporting, their numbers, their sales volumes number for November. And we thought that maybe it is time because this is, the first month after the festive season, the post-festive season, Santo. And if you remember back in, July when we were talking about the sector, when the sector was going through a very good run, I had told you that, it will be interesting to see how the sales data match up after this festive demand is gone. And clearly it seems to me at this point of time that the November auto sales data clearly is showing a very mixed trend at this juncture.
I'll take you up on that later, but anyway, please continue.
Yeah, for me, I don't, at this point of time, I don't really see clear signs of a broad-based demand trend in the, the way the people have been talking the sector up the past 6-7 months. Clearly those trends are not coming up. More concerningly, there are incremental data points now coming out of the economy itself, which could be a little bit of a, cautious tale for the sector. Yesterday, CMIE, which is an independent, economic data tracker, they came out with a report suggesting that unemployment rate in India actually rose in the month of November, which, of course, as we know, can be a concern for demand going ahead. The rural economy is still not doing well. I mean, if you have gone through the commentary from most of the FMCG companies, even two-wheeler sales data for this month also, that is clearly indicating that a large chunk of this economy has still not come out of the COVID-19 pandemic. And more concerningly, for the for the upper end of the premium end of the segment, your passenger car makers, your high-end motorcycle vehicle makers, the pent-up demand that has been boosting their sales for the past 1 year, that also seems to be fading away. Nomura yesterday did warn that probably the growth cycle in Indian economy has peaked out, and that is largely because of the fact that the pent-up demand that we had seen post the reopening of the economy earlier this year, that seems to be fizzling out now, and demand is now more on a normalizing trend. So given those factors, given the challenge of a slowing economy probably in 2023, Santo, I feel that maybe the best of the auto sector rally that we have seen in 2022 is behind us.
Well, I think when you say auto sector, probably CJ, you will have to segment it across two-wheeler, passenger vehicles and commercial vehicles. Now, two-wheelers, clearly it's a bit of a problem out there, especially the entry-level bikes, which have been seeing quite weak demand for quite some time now. The situation is not so bad with passenger vehicles very clearly. November was clearly a record month for them, a little over 3 lakh vehicles sold, and it's for the 6th month in a row that aggregate sales across all companies have crossed 3 lakh as far as passenger vehicles are concerned. And for 2022 overall, the year is expected to see total sales of a little over, I think, 3.18 million. This is according to what the automakers are saying. So this is past the peak of 2018, right? Now, that is one part, that is the sales part of it. Clearly, yes, there was pent up demand, I take that point, and some of it is now probably beginning to fade. Right? So what we could see is that the stocks which have seen a very good rally so far this month, now it's been again a mixed trend. You've seen some of the, some like M&M do really well, while others like Bajaj Auto, they had a good start, but again the rally petered out somewhere. Maruti again had a good run. So again, it's been a mixed trend. You'd never had an actual secular trend for a long time. They've all been performing in periods. Now there, I think so, now that sales levels are the beginning to normalize a bit, we could see some contraction in P multiple. Market may get a little cautious there, but there again you'll have to differentiate. So probably two-wheelers which have been underperforming for a while now, again TVS has been an outlier there. TVS shares have done well, not so much Hero MotoCorp.
Yeah, iShare has done well in that sense because of the premium tag.
Yeah, Bajaj probably has not done so well, Hero MotoCorp has not done well. So wherever the disappointment has already been factored into a large extent, probably there you could now see a reversal, mean reversion kind of thing. So it is very hard to take a call on the auto sector as a whole. There are few things working in favor of the auto sector at this point in time, most notably the easing of semiconductor part supplies. Then we have interest rates which have been rising for a while now, but most likely it could stabilize around these levels in some time. We could see another rate hike by the RBI. Fuel prices, that was also one of the reasons at least hurting two-wheeler sales. That has also now kind of stabilized. So things are unlikely to get dire for the automobile sector from here on, but at this point in time, yeah, maybe the upside in auto stocks, they appear to be capped for the time being.
Absolutely. I think you're just, echoing my thoughts, Santo, here, because my point is not that the cycle was probably a false dawn. I'm not suggesting that at all. What I'm suggesting is that the excesses that we had seen in terms of valuation for a lot of these auto companies, because of course, the present data that was coming in earlier this year, because of the jump in sales that we were seeing, that was largely driven by pent up demand. Now that growth is going to normalize and it's going to come back to a more normalized level, of course those prices will no longer be able to justify the sort of growth that we might see from the automobile pack going ahead, and hence my argument that maybe we could be in for a little bit of consolidation. You can see that already, you can sense that already in the market. The past 1 month, if you look at, in terms of sector leadership, as we have been heading towards, the record highs, is the auto sector actually that has been underperforming, whereas banks and, others have taken up the mantle there. So I think the market is already, probably the smart money in the market is already guessing that at this point of time, maybe the second half could be a little sluggish for auto stocks compared to the first half of FY23. And of course, we will have to wait and see, if there are any sort of incentives in the budget, what happens there. I mean, there has been talk, of course, the Revenue Secretary has been talking up, prospects of possibly streamlining the entire income tax slab, where they want to probably encourage people to go towards the no exemption, regime, as compared to the old tax regime. Now, if you go to no exemption regime, generally your tax payouts increase. That is one of the reasons why people have not shifted there. So how that will have an impact on disposable income going ahead? Of course, interest rates are still higher. It does not look like they're going to come down. They may still remain quite elevated, and that, of course, some NBFCs have indicated have had an impact. The other story here, Santo, is the CV cycle. Now, CV cycle saw a big boom from probably the latter half of 2021 till probably August, September, the festive period. But if you look at we have talked about the logistics sector, how the outlook there has suddenly started to change after the pent up demand went away. Now a lot of the rally in CV stocks was driven by the fleet rejuvenation that a lot of these logistic companies were doing. Whether that will, I mean, that is a one-time event, right? In a life cycle, that is a one-time event. That will not continue to happen. And with economic growth probably slowing down next year, I think CV cycle also may have seen its best days at this point of time.
Well, and with that, we move into the market setup for this morning.
Well, the market setup, Santo, is a little muted this morning. If you look at, the SGX Nifty futures, they're indicating a flat to negative sort of a start for Indian benchmark indices. Also, of course, the handover from Wall Street also was a bit of a mixed signal, because the benchmark indices there fell about 0.1 to 0.2%, largely on the back of some disappointing economic data coming out in the US. But very interestingly, the US 10-year bond yield slumped about 9 basis points yesterday, which generally should be a positive indicator for emerging market equities. Also, the US dollar index, that also is now trading below 105 handle, which is a big positive as far as emerging market currencies are concerned. So it'll be interesting to see how the rupee behaves today and how our markets behave. But generally, I think not much has changed as far as the bulls are concerned.
Well, one needs to be very cautious in this market. That's all I can say, CJ. The way it has been moving almost one way higher, that calls for some bit of caution. Some interesting trends there. One is that many of these portfolio management schemes, now they have started to trail Nifty returns, or even for that matter the benchmarks to which they have been pegged against. Quite a few schemes, even some of the high profile schemes there. So which I think this again seems to reinforce the theory that you really can't beat the market. So it's best you putting your money into an index fund, and if we see outflows from these schemes, probably that would again go into index funds, and you can see the same cycle repeat all over again, which is the index continuing to make new highs. Well, that said, a quick check on the FNOQs this morning. We're seeing long build up in futures of L&T Technology Services, Emphasis and Jindal Steel. Emphasis had seen long build up yesterday as well. Short build up seen in Granules, Indraprastha Gas. Both these counters had seen short build up yesterday as well, and also Shriram Transport. And we're seeing short covering in futures of Cummins India, Ultratech and LIC Housing.
Well, thank you for those F&O cues, Santo. Moving on to the newsmakers of the day, and the first one, of course, is from the new age tech space. PB FinTech would be in focus today with, SoftBank indicating that they're going to sell a minor stake in the company through a block deal. I believe half of that block deal has already gone through just as we were coming on air. According to media reports, SoftBank is looking to pare its stake by about 5.1% in the company in Policy Bazaar at a discount of about 4.6% to the going rate of the stock yesterday. And the important thing here, of course, is the fact that after this block deal is done, SoftBank then cannot sell any more stake in the company for the next 2 months. So that should provide a little bit of a relief as far as the supply of papers is concerned on PB FinTech. Let's not forget that, I think SoftBank has, timed this quite well, Santo, given the fact that PB FinTech has seen a very sharp rally ever since that, after the IRDA's board meeting, wherein the commission structure was revamped a little bit. Since then, PB FinTech clearly has seen a major rally, and SoftBank has utilized that rally to pare its stake in the company.
Well, Aurobindo Pharma is my newsmaker for the day. Now, some relief for the company there. It's got US FDA note for generic carbidopa and levodopa. Now, these drugs are used to treat Parkinson's disease. It's also got a US FDA note for ursodiol capsule, which is used to treat gallstones.
Well, moving on, Santo, your hot brokerage bet of the day.
Well, it is Bandhan Bank by CLSA. Now, CLSA has a buy rating on the stock with a target price of 300. CLSA is heartened by the fact that the bank is trying to diversify to non-microfinance categories, and the bank is also looking to increase exposure to states beyond West Bengal and Assam as far as its MFI, that is the microfinance category, is concerned. Now, one of the concerns which CLSA had till some time back was that that Bandhan Bank did not have sufficient senior management depth or bandwidth there to scale up its business in a big way. But now with the recent senior hires, CLSA feels that that problem is also getting solved.
Well, my top brokerage bet of the day would be SBI Cards. A report coming out from the house of MK Global yesterday, and they have initiated coverage on the stock on the credit card company with a buy rating and a target price of about 1,000. So an overall upside of somewhere in the range of 20 to 22%. Now, MK Global's view is that at this point of time within the credit card segment, SBI Cards is providing the most resilient as well as profitable growth opportunity, and therefore that is the reason why they are bullish on the stock at this point of time. They also believe that any the ongoing fear in the market that the RBI could cut interchanging fees by a large extent, as some rumors say even by more than 100 basis points, that is very unlikely to happen, and therefore those concerns are a little overdone as far as SBI Cards is concerned. That said, they did accept that interchange fees are going to moderate, and therefore they are still expecting SBI Cards to have a return on equity of 25 to 26% going ahead. Overall, limited provisions and strong operating leverage are other reasons why the brokerage firm is bullish on the company.
Well, and with that, the market has opened a weak start for the Nifty, down about 40 points in early trade, but market breadth is quite positive, as it always has been in early trade. 1250 stocks up, 500 stocks down. Mid cap index is flat, Nifty mid cap flat. So is Nifty Bank
barely flat
at this point. Sensex is down by close to about 200 points as we speak. Escorts Kubota among the losers in early trade, down by close to about 4%. Eicher Motors is down a little over 1%, and Hero MotoCorp also down about 1%. So overall, auto stocks are under pressure in early trade.
Yeah, absolutely, Santo. And I think if you look at sectorally, all of the sectors, major sectors, are actually under the pressure, barring the Nifty Media and the Nifty Realty Index. The Nifty Auto Index down about 0.6% at this point of time. The Nifty Metal Index is surprisingly doing quite well. Not surprisingly, actually, given the fact that they're riding that tailwind, of the China reopening theme. So clearly, the metal space is now coming back again in its own color, and it will be interesting to see if we could see some bit of change in leadership within the market. But other segments such as Nifty Bank down about 0.7%. Nifty Pharma also sort of a weak start for them, and Nifty IT also down about 0.1%. So overall, it looks like a muted session, but we'll have to wait and see whether we see some bit of revival in sentiment towards the latter half of the day, as we have been seeing for the past couple of days now.
And with that, we move on to the stocks on our watch list this morning, starting off with the multi-commodity exchange. Now, the stock has been steadily gaining over the last many weeks. Now, it has inched up to a near 11-month high. Now, one of the immediate triggers for the renewed interest in the stock also has been the second quarter numbers, which are pretty strong. The company managed to grow its top line sequentially by close to about 20%, but more than that, it also managed to improve its margin to about 50%. Now, the reasons driving the increase in top line largely is the improvement in average daily turnover volume on the boards, which is for November as well. The numbers rose by about 19% sequentially. That's a fair bit of jump. Now, initially, volumes in futures had taken a bit of a hit after the increase in margining norms, but since then much of the activity has shifted to options. And besides, CJ, given the volatility that we are seeing in commodity prices, which it seems likely to continue for some more time at least, MCX clearly is one of the big beneficiaries. Although there is one concern at this point in time, as the bourse is migrating its trading software from 63 moons earlier now to the one which has been designed by TCS, that will MCX got a 3-month extension from 63 moons, that originally the contract was supposed to end sometime in September. That's been extended to till to December. So there's some bit of uncertainty over there, but that doesn't seem to be a very major one at this point.
Yeah, I think, Santo, the major concern is around cost escalation with respect to that deal, because as the more the delay as far as including the TCS software in the trading terminal, the more the penalty or fee they might end up paying to TCS because of the delayed implementation. So clearly, that is one major risk on the fundamental side. On the technical side, at this point of time, most of the technical indicators appear to be a little neutral on the stock. So clearly, after a very hefty rally of 23% in the past 3 months, I think there is some case for the stock to see a little bit of a consolidation going ahead, and we'll have to wait and see. Maybe the life returns to the stock after Q3 earnings numbers come out. But at this point of time, on a fundamental basis, the stock clearly is riding the wave as far as the option trading, the pickup or the boom in option trading in commodities is concerned. Well, the stock on my radar today would be ONGC. The stock most likely will gain in trade, given the sharp cut that the government has come up with in terms of the windfall gains tax. Now, the government has cut the excise duty or additional special excise duty on crude oil production to 4,900 rupees per ton from roughly about 10,000 rupees earlier. So, there has been a 50% drop in windfall gains tax for ONGC. Also, the key theme, of course, for ONGC going ahead will be the improvement in realization. With the excise duty now coming lower, I think the market's confidence on improvement in realizations in Q3 will definitely will be given a boost, and therefore I think going ahead, given its high dividend yield as well as inexpensive valuation, this is one stock that could see some bit of trend reversal going ahead.
Well, the market doesn't seem to be very enthused by the cut in windfall gains tax. The stock is up barely about 1%, so that kind of
in a down market, 1% is still okay, Santo, I think.
Well,
it's outperforming at this point of time.
Oh, come on, that's splitting the hair, CJ, really. You're trying to make a very hard call.
I have to defend my stock picks.
Of course, of course. So, but based on this news alone, I doubt, CJ, if the stock would rally much. The rally is unlikely to sustain. But that said, downside also looks limited from these levels, because the stock has now been languishing at these levels for quite some time now. As you mentioned, dividend yield is certainly one of the strong points for ONGC. And let's also not forget, there's been another negative for ONGC recently, CJ, that's the capping of gas prices by the Kirit Parikh committee. So that is clearly bad news for companies.
Yeah, but Santo, some analysts seem to think that in the longer term, probably it may not be that bad a news, given the fact that if, of course, all said and done, if the government does accept the recommendation of liberalizing gas prices in 5 years' time.
That is still to 2027,
yeah,
CJ.
exactly,
We're talking about a very, very long time.
But sentimentally, that can, of course, have an impact on the stock. And at this point of time, now you can see, I think the stock is now really picking up steam, up about 3% in trade. So clearly, it seems like an up day and our outperformance day for ONGC.
Well, last stock on a watch list this morning is Oberoi Realty. The stock again had been under pressure till just a couple of weeks back, after the company said that it is planning to buy out about 50% of the area in its luxury project 360° west. Now, that led to concerns among investors that probably the debt levels on Oberoi Realty's books would go up, but the company then clarified saying that it was a cash neutral transaction. That appears to have kind of assuage investors, and we are seeing renewed interest in the stock. But CJ, again, some of the other factors still remain, which makes me a little cautious at this point in time. According to brokerage house Motilal Oswal, there has been a drop in its sales velocity at its Borivali and Goregaon projects. And so that's led Motilal Oswal to trim its FY23 and FY24 estimates. That's also because the execution, while Mulund has been steady in terms of sales, the execution has been a bit delayed. So, while Motilal Oswal is bullish on the stock, it has trimmed its earnings estimate. We have seen a good run up in the stock price. However, the stock has always struggled to sustain around 1100 levels, and most of the buy recommendation on the stocks are also with a price target of anywhere between 1050 to 1100. So, it looks like upside is limited. So, you could again see the stock move sideways, given the fact that we also have other factors like rising interest rates, which at some point will impact demand for residential projects.
Clearly, Santo, I think as far as fundamental concerned, overall, despite the incremental negative news flow coming out, I think overall Oberoi Realty has clearly been favored by the market. If you look at this year's gains alone, about 13% rise. Yes, it's not as great as probably other sectors have given, but given where the Nifty Realty Index is at this point of time, this has been a pretty good performance for Oberoi Realty. And if you look at it from a technical point of view also, at this point of time, there doesn't seem to be any sort of or any hint of weakness on the technical charts as well for the stock. Both the daily, weekly charts are indicating a lot of bullish momentum for the stock. The stock is trading above, actually sharply above its 50-day moving average, as well as its 100-day moving average at this juncture. So clearly, the technical side is still in the favor of the stock, and I would not be surprised that maybe after a little bit of consolidation, you could see some bargain hunters appear on this counter.
Well, CJ, and unless we have any questions.
Yeah, we do. Actually, one of our viewers, Santo, wants to know our thoughts on, and this is Praveen _93, who wants to know our thoughts on, banking sector in particular. What are the thoughts on banking sector, whether they are good, I mean, from an investment point of view, of course, whether it's a good bet to have or not?
Well, they've had a good run up. I think that should give pause for thought, given that, yes, definitely credit growth has been pretty strong, not just for private sector banks, but also for most of the public sector banks. There have been a few laggards here and there, but overall most of the banking stocks have seen a significant re-rating over the last 3 or 4 months, particularly the private sector ones. Asset quality has improved significantly for the public sector banks, which is leading to a re-rating on that front also. I think, CJ, near term probably much of most of the positives could be reflecting in the stock price, although the longer term outlook still looks good. But if one were to look at these stocks, probably I would say that a little caution would not be out of order.
Yeah, I think, Santo, the other day we had Abhay Agarwal from Piper Serica on our show, and he said that he would expect the banking sector to remain somewhere around 1 or 2 in terms of market leadership next year as well in 2023. But now, though, I think that blanket rally in banking stocks is over. Now you have to probably play it a little smart and go with banks which have the ability to attract as much deposit as possible without raising deposit rates by too much. Now, so in that case, of course, you would all tend to favor larger banks with a very established brand image and brand loyalty with customers. So your HDFC banks, your ICICI banks, your SBIs of the world tend to probably will steal a march as far as deposits are concerned compared to your mid-cap lenders out there. And because at this point of time within the banking sector, it's not a fight as to who can give a loan to whom, because they are able to give loans out very easily. The problem is funding those loans, because deposits at this point of time are growing at much smaller rate than the loan growth at this point of time, and that creates a bit of an issue as far as CASA is concerned, as far as net interest margins are concerned. So it's a very interesting time. Of course, it's a high growth era that banking sector has entered. Credit growth at this point of time is at a decadal high, which we have not seen since 2012. So clearly, overall long term, the prospects of the sector remain quite bullish. But now I think investors will need to start distinguishing between the men and the boys in the sector.
And with that, we wrap up this edition of Market with Santo and CJ. Thanks for watching and also sending in your queries.
And guys, as usual, keep following us on the social media links that you can see at the bottom of your screen. And for the rest of your financial news, stay tuned to moneycontrol.com and download the Moneycontrol app. We'll catch you again live at 3 p.m. with all the day's trading action. Till then, have a great day.